What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is October 7th of 2022. Another tumultuous day of events and emotions in the market. Let's take a look at these box scores, and we're going to dive into the jobs data as well as the AMD earnings miss. S&P 500 finished the session down 2.79%. Our NASDAQ QQQ down 3.81%. Very large move. IWM small caps we're down 2.94%. Our dogs in the Dow down just 2.09%. Our ARK Innovation ETF was down 6.57%. That was our biggest loser on the session. And the TLT long-term treasury ETF was down 0.97%. Certainly did not help matters. Pretty much all of these indices, they closed towards the lows of the day. And we did have an expansion in volatility across all of these indices, except for the IWM small caps. I will note a rather small expansion in vol for such a big move in these indices. Brent was at washout levels. We only had 7% advances in the small caps, 8.7% total up volume, and the trend model did flip from a +1 reading to a -3 reading. All right, so we had really two big moving parts for today's session, 2 to 3. So the first is today's economic data. We had the non-farm payrolls unemployment report. And when this came out, we previewed this yesterday and we said, hey, we're still in this environment where good news is bad news and vice versa, right? Well, we got the new unemployment rate for September, came in at 3.5% versus a consensus estimate of 3.7%. So a little bit better than expected. In terms of jobs added, we had 263,000 versus a consensus estimate of 250,000. So that's a little bit better than the expectation. Average hourly earnings was up 0.3% month over month versus a consensus estimate of 0.3%. And on a year over year basis, that equates to 5% earnings growth. Now, it's very interesting just in terms of like narratives and what the Fed has been discussing. We really want to get inflation down, right? And really the major cause of inflation has been these supply side shocks. There's not enough stuff to buy, so the price of that stuff is going up. Now, instead of like investing in further supply, whatever that might be, the Federal Reserve, they're using their blunt tool of just like, let's raise interest rates to fight inflation. And they're trying to reduce demand. So one of the things that they continue to cite is, oh my gosh, this wage growth is like horrible. And the fact that there's so many Americans employed, that's a huge problem in terms of getting inflation down. So really what the market was looking for and hoping for is like, hopefully, the jobs report misses, average hourly earnings misses. But I gotta say, when I saw this report, of course, this report certainly does not scream, oh yeah, the Fed's gonna pivot. But I think there's a continuum of things that can happen. A Fed pivot is on one end of the continuum, and then just the Fed being increasingly hawkish is on the other end. To be honest, when I saw this report, I was like, okay, average hourly earnings are barely up. On a year-over-year basis, they're up 5%. The CPI and the PPI, they're up over 8% year-over-year. So that's a big spread over this earnings growth. So the earnings for employees is not nearly outpacing the inflation rate. Inflation is overwhelming their earnings growth. So from an inflationary perspective, like I don't see this jobs report as like, oh my gosh, this is horrible. It's going to just cause a bunch of inflation. But it's not what the market was looking for in terms of like, oh yeah, the economy's in a recession, boom, the Fed can pivot. So we ended up having a negative reaction off of this. And then we also got hit with this sort of double whammy of news. So first of all, AMD, they reported a revenue miss. And you can see they issued a $1 billion shortfall warning on expected sales to PC customers late on Thursday. So they basically pre-released their earnings and they said, hey, we're going to be coming in light on revenue. And so when we got that news, AMD was down maybe like 5% on the open. But then we got another headline that came out on Friday, and you can see here on Friday the U.S. Department of Commerce expanded its list of chip technology that requires a license to be sold to China, essentially a euphemism for a ban if the license can be denied. And the semiconductors reacted very poorly to that. So we got news that it's kind of like a trifecta of horrible news. Like one, The jobs report does not show we're in a recession, which is what the Fed is looking for. But then the semiconductors earnings shows like demand is slowing. So it's like, all right, earnings are bad and the inflation is not being helped. So it's kind of like a double whammy. And then this Department of Commerce, chip ban, that really just adds the insult to the injury. So we had a horrible reaction in the market. The VIX futures curve, you can see, is very inverted now. These front 2 months, the front month is trading above the back month. This basically means we're still in the heart of this volatility event. In terms of the heat map, just look how everything got destroyed. The semiconductors are really the epicenter for today. Nvidia was down over 8%. AMD was down over 14%. Tesla got hit, down 6.32%. And the configuration that we really don't want to see, which is energy stocks being the leaders for the day's session. In terms of sectors, we have the MSOS Cannabis ETF, which is still in our top momentum slot. And I would like to point out the implied vol on this ETF is 116%. So that's basically implying that this could double over a year, double or, just get cut in half as well. It cuts both ways. But yeah, the implied vol actually decreased over today's session for MSOS. Interesting as well, this implied move based on the implied volatility for 1 day was 7.3%. While the ETF did pull back, it only pulled back 2.8%. You can see other ETFs, like for instance the ARK Innovation ETF. Where is it on here? Or we'll take a look at semiconductors for an example. Lost 6% value. The implied vol implies a move of only 2.9%. So that was like double the expected move. And it really just shows like we had some big carnage across these markets today. In terms of what did the best, if you look at this range, that's always a good spot to look on this report. And aerospace and defense closed almost on the highs of the day, only down 0.42%. So again, that's not really what we want to be seeing, right? Style factors. What did we see here? In terms of best performers, we had international value only down 0.81%, but high beta got smoked, down 3.6%, and growth got smoked, down 3.45%. In terms of options trades, nothing there. And then in terms of common stock trades, I did make a substitution. I actually forgot to put it on this document, but here's what I did for today. So I actually stopped out of Enphase. And again, like this was, I bought Enphase. It was showing relative strength, but then these solar stocks really fell apart. Let's close this one out for a loss. But then I did add an exposure to MSOS. This is the US Cannabis ETF. And really just getting long after that news that there was going to be a pardon from the president, basically like a decriminalization of cannabis. Let's take a look. So that was the only thing that I did for today. In terms of the S&P 500, now this is, I can see why it's very emotionally taxing on everyone involved, myself as well. Today was day 37 of this sell-off, which is huge. And it's kind of like, the market's basically been taking like 5 steps back, 1 step forward, 7 steps back, 2 steps forward, 10 steps back, 2 steps forward. And it's just kind of like this environment where it's like, really challenging. So here it's like, yes, we finally got a 2-day rally, market's up 5%. Maybe we're getting out of this. This is great. We're back inside value. But then with the dollar index strengthening and crude oil strengthening as well, we gave back a large portion of the gains this week. And I want to show you, we're going to go to 2 different time frames. Let's go to the hourly time frame first. We are right here. We pulled back to this bottom of the weekly value area and we found support there. So that is pretty tidy. I mean, if you're optimistic, you might say, hey, let's see what happens. Let's see if we can hold above 37.5. But also take a look at this weekly time frame. So it feels today after the market closed like, oh my God, the market crashed this week, didn't it? Because the market was down so much today. But if you look at the weekly chart, the market made progress this week. Sorry, I'm getting a call. The market did make progress this week, so that is actually not, the worst thing in the world. So I mean, again, it's not the best thing in the world. Is this like a bullish setup? No, it's not. But I think it's also like, if you weren't crying in your soup heading into Monday, you shouldn't be crying in your soup today, because we're actually trading higher today than we were on Monday. So it's just important to zoom out and kind of keep that perspective. But I know if it's like, if you're really hoping the market was going to rally on this jobs report, I certainly was. It can be, just like demoralizing. Like, oh man, another day when the market is just down big. Let's take a look at the VIX. VIX up 2.75% for today. And yeah, we're just kind of like consolidating sideways in the VIX. Definitely not the best look here. And then what did we have? The dollar was the big wrecking ball for today. The dollar was up 0.44%, closed out near the highs. I mean, this was great here. This was, I believe this top corresponded with the pivot from the Bank of England, and all of a sudden the dollar just started getting a little bit weaker. But then we were very quickly just like retracing those losses. That's definitely not what we want to see. And then the other sort of wrecking ball is crude oil. Crude oil is up 5.37%. So it's kind of like, today was one of those days where all the cards that we received were like, okay, AMD is signaling that the economy is very weak. And it's like, but the jobs report is signaling that inflation is very strong. And crude is signaling that, inflation is going to be going higher. And the dollar signaling that while AMD's earnings report showed the economy was weak, our economy is still, better than everyone else. And like, we're going to tighten, and that's going to cause like a currency issue. So today was kind of like just everything that could have gone wrong pretty much went wrong for the markets. I also want to put on your radar before we break, next week we're going to have inflation data that's coming out. So definitely keep a watchful eye on that. Let's pull it up right here. What do we got? We have U.S. economy adds more jobs. Oh, this was the good news. So this came out in the morning. The World Food Price Index is really falling. So we're getting a lot of these data points showing that inflation is starting to slow. I mean, housing is slowing, food prices are slowing. We just need it to come through in the data. No one is going to believe it until it appears in one of these data releases. So let's take a look. On Wednesday, we have the PPI report coming out for September. And what else do we have? On Thursday, we have the CPI report coming out for September. So no one knows how these are going to come out. I would say at this point, the market is pretty much positioned for, there's going to be no deceleration. But it is important to note, if we look at this PPI month over month, or even like the CPI, you can see this has been starting to decline. It's definitely way off the highs. And let's take a look at the CPI as well. Where is this? Yeah, we'll look at month over month. Yeah, we'll take a look at core. I think this was the bad one last time. Yeah, you can see this continues to climb. So I do think if we were to get, the market's expecting, we're just in this horrible state. It's going to last forever. Inflation's never going to come down. Yeah, I do think there's room for a surprise because no one believes the inflation number can come out good. Remember, the last time the inflation numbers came out, this is where we were. The market ripped into the inflation numbers right up here. Everyone was super optimistic. Oh my gosh, inflation peaked. Now we're seeing the exact opposite. No one thinks that inflation could have peaked. It's going to be a very interesting week. No one knows what's going to come. I think we're just going to have to see what the river brings. Also interesting, before we wrap real quick, take a look at where Tesla is. Tesla tagged this Venom S1 pivot after having a 6% sell-off. This asset went from a high of $313.56. That was on September 21st, just like 2 to 3 weeks later. We're all the way down at $223. We've lost almost $100 in 2 to 3 weeks. at a certain point, like, this is a reasonable destination for this sell-off. I mean, the next level down, we do have this 203 spot 16. But we'll have to see if we can get any relief on inflation, then cooler heads could prevail. So we'll have to see what happens. With that being said, that about does it for this market recap video. Hope you all have an awesome weekend. Get some rest out there. Take some time away from the screens. And we will see you all on Monday.